Money. Money.
It's always great to get a little news from Freddie Mac. With the overall economy just inching along, some experts are questioning whether the housing market can continue its momentum throughout the rest of the year. Now, people are beginning to ask questions such as, will disappointing economic news adversely impact housing? What about if the affordability of major concern in today's real estate market? Are we approaching a new housing bubble? Are mortgage standards too tight, or are they loosening up? Well, here's a comment from Freddie Mac in the Economic Outlook Distress of Disappointing Economic News and Impact they think it may have on housing. Quoted, recent data darkened the growth outlook of the first quarter of 2016. However, despite the disappointing economic reports, we still forecast housing to maintain its momentum in 2016. Now, also quoted, we've revised down our forecast for economic growth to reflect the recent data for the first quarter, but our outlook for the balance of the year's remaining modestly optimistic for the economy. Now, what about real estate? Well, Freddie Mac was much more optimistic about the housing and quoting, we maintain a positive view on housing. In fact, the declines in long-term interest rate that accompanied much more of the recent news should increase mortgage market activity. Now, they went on to include that we expect housing to be an engine of growth. Construction activity will pick up when we enter the spring and summer months, and rising home values will bolster consumers and help support renewed confidence in the remaining months of the year. So great news. The latest report from Freddie Mac also showed that the 30-year fixed-rate mortgage averaged 3.61% for last week, slightly down from the week before at 3.66. Crazy. And nearly 20 points lower than a year ago at 3.80. So it's just funny that they just keep going down. You know, all experts, including myself, have said for so long that there's nowhere to go but up, but they've gone down. This is great news for homeowners who are dealing with rising prices due to low inventory of homes for sale in many of the areas throughout the country. Now, Freddie Mac expressed their optimism for the rates to remain low throughout the spring in recent blog posts. And they also stated, we expect mortgage interest rates to stay well under 4%. As we head into the heart of the spring homeowner season. We're predicting it to be the best one in 10 years, which should provide even greater opportunity for first-time homebuyers. So with interest rates falling historically lows, yet many experts still expect them to increase in 2016. One thing we know for sure that according to Freddie Mac, current interest rates are at the best that we've seen since April. Now, every 0.25% of the interest rate, so when the interest rates do move up, something to kind of look at, every 0.25%, give or take, is about $60 a month in your mortgage payment. So depending on what you're doing for a down payment, it's equal to maybe about $10,000 buying potential. So rates go up 0.25%, you lose out and buying potential of $10,000. Now, what this really means in the bottom line, if you're thinking of purchasing or refinancing, why are you waiting? I'm in the mortgage industry. That's what I do full-time, expert in that arena. So if you need my help, please feel free to call 1-855-400-1150 or go to themoneyhour.com, and I'd be more than happy to assist you with any of your mortgage needs. Coming up next in the Money Hour, how many taxpayers experience identity theft, and are you at risk? Well, we've got Greg Nunn with None Better Tax Resolution right here on 1150 AM KKNW after this short break.